80% reduction in revenues in the third quarter makes for a very, very difficult set of numbers, a tough quarter. But that said, if you look through the numbers, you certainly can see the impact of the pandemic, but we can also see real encouraging signs of improvement in things that we can control. Demand was down 80%, so we're at 20% recovery levels in the third quarter. The second quarter, at the peak of the pandemic, we were at 10% versus 19. Third quarter, we're at 20%. We expect the fourth quarter to be somewhere between 30 and 35% of the fourth quarter numbers. So steady improvement. It's slow, but clearly consumers are getting more confidence in travel. One of the reasons for it is the great job our team's doing with respect to instilling confidence and the comfort with respect to their travel experience. Our Net Promoter Scores, our customer satisfaction scores, are at all-time highs in our company's history. And when you think about what that means going into 2021, there's real momentum that we're seeing starting to be built. The cost story is also a really good story for Delta. We were able to eliminate over 50% of our total cost in the third quarter, same as we did in the second quarter. But even more impressively, in the fourth quarter coming up, our total unit costs are actually going to be flat to down versus 2019 levels, despite the fact that we have 40% less capacity flying. And you put all that together, what it means for December month, we expect our cash burn to get down to about $10 million a day, which is about the pace we see in the fourth quarter, 10 to 12 million. And we have real good line of sight to getting to cash flow break even and cash flow positive in the spring. So
let's
you put
talk about
that story in place. You put that story in place, Phil. You think about it, in a 12-month cycle from the start of the pandemic to turning cash flow positive, I think it's actually a pretty encouraging story.
Absolutely. People are encouraged that you can see, at least you have line of sight in terms of when you think you'll hit break even, which you guys have said will be in the spring. But admittedly, you're in the midst of what's going to be perhaps the toughest 5-month stretch here, because Q1 is always a rough month for the airline industry. Nobody's quite sure what you're going to get for the holidays, especially if there's another spike in COVID-19 cases. What is your outlook for the holidays? Are you perhaps dialing it back a little bit, given the fact that we are seeing this spike in cases?
Well, there's never been a time in our history that we've had more uncertainty. But that said, our early advance look for Thanksgiving and Christmas is encouraging. Consumers are wanting to travel. They feel confident in travel. One of the things about air travel, Phil, that people need to know, get the facts. IATA, the International Aviation Authority, came out last week, said over 1 billion people have traveled by air this year, over 1 billion. There's only been 44 documented cases of suspected COVID transmission amongst those billion, and virtually all of those happened in the early weeks of the pandemic in January through March, before any of the protocols, masks were not in place, all the things that we've implemented since. So consumers are feeling really safe with travel. It really gets down to what the experience will be when they land. Will the hotels be in place? Will the restaurants be open? What's the condition of the virus in the local communities? But as more medical technologies and solutions come to bear, as rapid testing comes to bear, I think going into the seasonally difficult months, as you suggest, may actually be counter-seasonal, and people will start to travel this winter at a higher relative clip than they've done in prior years.
Shepard Smith here. Thanks for watching CNBC on YouTube.